Hello teacher, my name is Tiên from the group name is Brokers, and today I want to show you the case study of Big Jet. Our group member have Trung, Huy, Linh and Tiên. Our table content we're gonna have the 7 parts. Part one is introduction. The second is financial performance. Third is economic, industry, and competitive analysis. Fourth is financial analysis. Fifth is non-financial analysis. Sixth is stock performance and investment decision. And seven is conclusion. For first one is overview and strategies. The VJS stand for VJC, is Vietnam's leading private airline operating a new age airline. The model focus on the digital efficiency and customer experience. Its fleet is more than A320, A321, A330 aircraft. Its cost efficiency is strict LCC operational control. Ancillary revenue is high margin income to prefer ticket price. Supply chain is complete control from ground to air. About the marketing strength is maintained for the first position in Vietnam's domestic aviation market. Is aggressive expansion into India and Australia, capturing high international traffic. Its 7-star safety is in the top tier safety rating from the international organization Building Global Trust. To 20 and 24 financial breakdown is profit before tax is highly more than 210%, and profit after tax is 507%. G&A analysis is cost and investment. The strategic perspective, the 70% increase in general and administrator cost is calculate the long-term investment, not just the cost. Is include the scale, the people, and technology. It also has the risk and challenge. The risk is operational delay. While operation congestion at the major airports creates schedule delays, legal and financial pressure to settle aircraft, and lease debt and reserve, commercial disputes, high leverage, rising debt to equity ratio require careful financial during expansion. About financial performance, Vietjet is successful balancing aggressive expansion with necessary structural investment. For about VJC stand for Vietjet is for the first one in introduction is general information about Vietjet proposition and model. The pioneering and leading private airline in the low-cost carrier is standing for LCC, Market in Vietnam, known as the New Age the airline. A core business operation, passenger and cargo transportation by air, listing the official list on hold to the ticket VJC in 2017. The network is the VJC have an extensive domestic network and its expansion into the international market into the Asia Pacific region, including Australia and India. About the business strategy and achievement is optimizing operating cost, aim to complete its aviation supply chain strategy focus on the optimizing operating cost, growing revenue from the service, and the completing its supply chain. Organization structure operates under modern corporate model, generally meeting the shareholder board of direction and the executive board. For the second is financial performance. The financial performance financial performance is will include the generation and administrative expensive is standing for G&A. You can see you can see in the screen is the number in the year 2022 is more than the 2023. For the reason for GA increase reflect the airline aggressive expansion strategy is an investment in strengthening is managed foundation as post-pandemic recovery and growth, particularly an increased frequency and expansion of the international network, is launched 11 new international routes in 2023. Its larger operational scale increased fleet to the 94 aircraft transported over 25.9 million passengers, operating 145 routes. It includes 75 international. In financial performance also have the accounting before the net accounting profit before tax and net profit after tax from the 2023 to the 2024. The main reason for the 2024 got a certain growth in the exceptional profit growth is profit before the tax stand for BT surging by 200.69% and profit after tax increased by 507.79% compared to 2023. Focus on the international market. This was decisive factor as this market boasts a significantly higher profit margin than domestic routes. Economics of scale, investment made in rebuilding the administrative and modernizing the fleet and in 2023 economy and of scale in for 2024.
Hello, teacher, and everyone. Next to teen financial performance, we will go to the chip a pastel analysis. As there, we will analyze from political, economic, about social, cultural, technologies, environment, and legal. As there, we also have many aspects of economic industries and competitive strategy assessment in the chess aviation. At first, we go to political factors. And there we have two main ties about the aircraft import policies that the new government decreased allow importing civil aircraft from more countries like Brazil, Canada, UK, Russia, and China, which had to reducing reliance solely on FAA and EASA certifications. Next, about the visa policies. At there we have favorable and relaxed visa policies, which you have the government pushed tourism for notice areas like Korea, China, and Japan. This led to a 26% increase in international passenger traffic in 2024. Next to about the economic factors. The tourism leverage about 5.3 million Vietnamese went abroad in 2024. The strong growth in passenger traffic creates significant demand for aviation services. About the interest rates, the costs like leasing and loans are in USD. Fluctuations in interest rates directly impact Vietjet's profitability. And final, about the fuel costs. Vietnam Airlines use jet a fuel accounts for 30 to 40% of input costs. The business is highly sensitive to global crude oil price changes. About the socio-cultural factors, the experience economy, the customers now prioritize experiences over material goods, high willingness to spend on domestic and international travel during holidays and also the shift towards high-end resorts and exploring nature. But the Vietnam Airlines also faced to a challenge that Vietjet Airlines. Hello, lecturer, and everyone. Next to 10 financial performance, we will go to analyze Vietjet Air Pastel. And then we will analyze from political, economic, social, cultural, technologies, environments, and legals. We also have some key aspects of economic, industry, and competitive strategy assessment. First, about the political factors. At there, we have two main types. Aircraft import policies, where the new government decrees allow importing civil aircraft from more countries like Brazil, Canada, UK, Russia, and China. It helped the budget to reduce reliance solely on FAA and EASA certifications, and they will open or wider their aircraft, their aircraft, and also in visa policies, which has also to maintain about favorable and relaxed visa policies, which have the government push tourism from Northeast Asia like Korea, China, and Japan. This led to a 26% increase in international passenger traffic in 2024. Next, we'll go to economic factors. I think we have the also three main keywords about tourism leverage. In tourism leverage, we have 5.3 million Vietnamese went abroad in 2024. The strong growth in passenger traffic creates significant demand for aviation services. Also, the Vietjet Airlines can make profit from the fluctuation in interest rates, like some costs like leasing and loans are in USD, and the fluctuation in interest rates directly impact Vietjet's profitability. Final, the fuel costs. that Vietnam Airlines use Jet A1 fuel accounts for 30 to 40% of input costs. The business is highly sensitive to global crude oil price changes. Next, that the socio-cultural factors, the experience economy. Customers now prioritize experiences over material goods, high willingness to spend on domestic and international travel during holidays, and it's also shift towards high-end resorts and exploring nature. But the Vietjet airline also faced a challenge. Vietjet must enhance customer experience to meet these evolving needs. Next, about the technological factors. We also know in this era, digital transformations is the main keyword for many for many industries and many things. Also in airline industries, we have digital transformations to adopt the airline retailing offers and orders model as recommended by IATA. Some key technologies that IATA lists for the airlines is AI and Gen AI used to personalize customer experiences. Also, data collaborations used to enhance operational efficiency, and also IPA platforms, better information sharing in many types. Use the technologies in airlines industries can help to reduce costs and improve different product differentiation. The two last factors about legal and environmental. And the legal framework, the almost airlines operate governed by the operate by the Vietnam Civil Aviation Law 2006 must meet both domestic and international requirements. But also we also have the safety compliance about maintain 7/7 star safety rating for airline racing, achieve IOSA certification for operational safety excellence. That's all of it things to make sure everything about the everything, every factors around budget can contribute to their development. And next to me, we will go to his financial analysis.
Hello, teacher. My name is Văn Huy. Today I will present the financial analysis with chat. Okay. In this presentation, we look at Vietjet Air financial performance from 2022 to 3Q 2025. We focus on three main indicators: ROIC, ROE, and ROI. This number help us see how well the company uses its capital, its equity, and its assets during the recovery after COVID-19. By going through each indicator step by step, we can clearly show how Vietjet moved from a difficult during period in 2022 to a stronger and more stable performance in the following year. In this slide, ROIC shows that Vietjet went through a good period in 2022 when the number dropped deeply because travel demand was still low and the airline has been maneuvered to operation. But from 2023, our IC start to recover again. The improvement continue into 2024 and even through 3Q 2025 saw a small drop. The overall trend still point upward. And the next slide we will talk about the return on equity ROE. ROE also hit a lowest point in 2022, but it fell back faster and then the other indicator. This shows Vietjet was able to use its our capital more effectively once the market recovered. By 2024, ROE reached a strong positive level and even through 3Q 2025 is slightly lower. The company will still stay in a positive zone. And next slide, we will talk the return of assets ROI. Okay, ROI dropped in 2022 for all the same reason, high cost and low price activity. But from 2023, we just start to use its faith and accept better as travel demand return positive again in 2024. In 3Q 2025, the number is not high, but it is so the company is moving in the right direction. And to sum up, indicate three main indicate we can talk about and to sum up three main indicate we trade ROIC, ROA, and ROI, RAE are safely in 2022, but the company has been recovering step by step since 2023. ROA improved the faster, while ROIC and ROI recover more slowly. By 2024, all three indicators was positive again. Even with a small dip in 3Q 2025, which is still on a clear upward trend. So in that, the company is getting back on track after the pandemic. And next and final, we will talk about the compare with Vietnam Airlines half year. In this slide, we can show three table chart is ROA trend of FVN from 2022 to 3Q 2025 and ROIC trend of FVN from 2022 to 3Q 2025. Okay. When compared with Vietnam Airlines, which saw a more stable recovery, which had better ROIC is year. They control costs well of focus on stable routes. Vietnam Airlines, meanwhile, faced bigger loss during COVID-19 since they had to run many non-profit flights, like research flight and vaccine transport. ROE of Vietnam Airlines also moved up and down a lot. Why? While we just research more steady. And next to me, Linh will present non-financial analysis.
Hello everyone, my name is Diệu Linh. Today I'm going to talk about how Vietjet's performance is influenced not only by financial indicators but also by several important non-financial factors. These include ESG initiative, human resources development, CSR program, and branding strategies. All of these elements work together to support the company's financial recovery in recent years. First, let's look at the environmental side. Vietjet has been upgrading its fleet with newer and more fuel-efficient aircraft like A321neo and A330. They also optimize flight route and adopt fuel-saving recruiters. Why does it matter? Because fuel is not one of the biggest costs for any airline. By reducing fuel consumption, the company successfully lowered operating costs, and that directly support profitability. In fact, ROIC improved from negative level in 2022 to around 0.5% to 2.5% in 2023 to 2024, partly thanks to the sustainability practice. Next, we have HR and employee development. Vietjet invests heavily in training through the Vietjet Aviation Academy, which offered international standard program for pilots, engineer, and cabin crew. Continuous training improves service quality, make
operation more reliable and reduce safety risk. They also use ESOP to motivate and retain key employees. As a result, ROA increased from 0.3% in 2023 to 1.4% in 2024, showing that the workforce is becoming more productive and assets are used more efficiently. Vietjet also maintain long-term CSR programs such as chuyến bay yêu thương, educational scholarships, and community support across Vietnam. These activities strengthen the airline reputation and build customer trust, which is extremely important, especially after pandemic. Stronger customer loyalty contributes to revenue recovery. That's one reason why ROE rose from minus 15% in 2022 to almost 9% in 2024. So, finally, Vietjet invests in branding through international partnerships, digital marketing, and diversified service like Skybox and various ancillary products. A stronger brand helps the company reach more customers globally while reducing marketing costs in the long run. This strategy supports stable revenue and long-term growth. The upward trend in ROE and ROA during 2023 to 2024 is consistent with this brand expansion. To sum up, Vietjet's success is not driven by financial metrics alone. Environmental initiatives reduce costs, HR development, increase productivity and service quality, CSR program, strengthened customer trust and loyalty, and branding efforts ensure long-term growth and competitiveness. Together, these factors explain the positive movement ROE, ROA, and ROIC over 2023 to 2024. Overall, non-financial drivers play a crucial role in Vietjet's long-term performance. Thank you.
Hello, teacher. My name is Văn Huy. In this part, I will talk about stock performance and investment decision. Okay. From 2022 to 2025, Vietjet Air went through a lot of trend in port business research and stock price. In this part, we will talk about how to stock move, what caused the big shift in 2025, and what it means for investors right now. The goal is to give a clear and simple view of Vietjet recovery and why the stock reacted the way it did. Okay, next slide. From 2023 to early 2025, the stock mostly moved sideways around the 80 to 100 range. Nothing big happened in the business during this time, so the price stayed flat. Volume was also low, which so that investor was not excited yet, and was mostly watching. This was a wide variance when the market was waiting for a stronger Sydney before reacting. And next, we will talk about risk in mid 2025. Okay, in 2025, everything will be trend when the stock suddenly jumped from around 80 to 100 to above 300 to 100 to above 200. Trading volume increased a lot. meaning more money start coming in this rate out so that investors become more confident in Vietjet recovery. The move was fast, strong, and clearly different the long periods before. And next slide we'll talk about the investment risk. Okay. During the same time, Vietjet number also improved. ROE, ROA, and ROIC all moved from negative in 2022 to positive again from 2023 to 2025. So in that the business were running better and costs were more under control. But the momentum is now slowing down and the stock already is a high level, buying about 200 come with more risk, and the trend on a short time contracted is higher. And final my and final to sum up, with just strong compete have pushed the stock up, but at the current price, the risk is higher than before. This is a good time to look in the to lock in profit because most of the recovery story has already been priced in. That's why the final code is safe for investors who want a safer and more balanced balance position. And next me, Jung will talk about the conclusion.
Hello, lecturer and everyone. Nice to meet. My name is Chums again, and we will go to have a virtual strategic conclusion. At first, we will say that after pandemic, the virtual line have the rapidly resilience and recovery from challenges to efficiency in 2022 to 2024. The pandemic had a serious impact on the chat, which ROIC and ROE dropping below a minus 10% in 2022. But the turnaround in 2023 and 2024 indicators turned positive immediately, driven by effective pricing strategies, operational efficiencies, and economic recovery and resurging travel demand. This is all of our reports and presentations. Thank you for listening.